Good morning. Welcome to the morning market briefing. We've got a storm coming, Tom, and it's Winter Storm Fern, and it's having an impact on markets. Natural gas prices have spiked 60% to $5.30 per million BTUs. We saw refiners, oil and gas drillers doing well, although some of that might have been due to Halliburton's earnings yesterday morning. Costco and other grocers have been doing quite well. I know that you went to one last night and just saw the panic in the streets. Interestingly, for those companies, their quarters don't finish in December. Their quarters finish in January because they're on the retail earnings reporting schedule. So we'll have to see what happens when they actually do report earnings. In my experience with these things, whether it's the insurance companies that'll probably get hit to the downside, they haven't been yet, or the grocery stores that'll get boosted to the upside, all it does is just cause more volatility. And it doesn't just cause volatility for that quarter and the subsequent quarter, but also for the next year, because then you start to compare over the prior year. So my advice on any of this, and this is technically not investment advice, but is just don't chase these things because the move is the move is the move, and it's already generally played out. Right now, the base case is that Washington, D.C. is going to get 18 inches of snow. So if you think it's going to be 30 inches and stick around for 2 months, then yeah, maybe you buy a little bit more natural gas. But that's what's priced into the market right now.
Yeah, I will say it was pandemonium last night at Publix. I would estimate that there was between 400 and 500 people. I mean, it was at least 15 people per aisle. There was no water, no bananas. Milk was low, eggs was low, toilet paper was gone. I mean, it was pretty chaotic, and you could tell that every single person working there was over it because it probably had been going on all day. So, but I mean, I've kept a pretty close watch on this just because having small children, obviously panic levels are very high in the house if we were to lose power for an extended period of time. But the AccuWeather.com, which I find to be much more close to what actually happens most times, says that we have a 75% chance of 0.05 inches of ice. Which I don't even know that I could accurately measure with my fingers how little that is. So I'm hoping it just blows through, but I think, the mid-Atlantic is probably going to get crushed, but they're far more capable of handling that than we are. So we'll see how it goes. I've heard that Chicago is going to be multiple days of sub-zero temperatures, kind of like I think it was 2017 where they had the polar vortex when it was so miserable up there. So should be interesting. But but weather notoriously is one of the biggest cop-outs of earnings seasons. Companies love to use that. They're like, oh man, the weather, whether it's too rainy, too hot, too cold, they love to use it. So I'm sure we'll see a lot of that next quarter where they'll say,
especially if you're a construction company in Texas. I mean, that's going to be, or really the entire South or that belt where the storm is going to go through. It's going to be a slow start to the year for those companies. Tom, sticking with very cold weather, we did have a deal on Greenland, or not so much a deal, but a Greenland U-turn. And we have a truth that Donald Trump tweeted out last night or yesterday afternoon that really sent the market higher. He says that he met with the Secretary General of NATO, Mark Rutte, and they have formed the framework of a future deal with respect to Greenland. And essentially what it's going to do is give the United States, from what I can gather, areas of land where they can construct essentially bases and build the Golden Dome and do all these things. And it doesn't look like any of the sovereignty of Greenland will be in question. So that's kind of what it's going to be. And basically, I think that I've definitely had some instances where I think the term taco is used a little too loosely. And I think that, Trump sets a very extended bar so that people can have a win, but really he gets more than he would have gotten otherwise. This, I feel like he could have probably achieved without doing the tariff threat.
Yeah. I mean, I think the concurrence with being at Davos, having to be around all those leaders that are obviously sword rattling. I mean, I saw reports this morning that Spain is talking about sending military troops to Greenland to help protect. It's like, I mean, do they even have an armada anymore?
The funniest thing to me was how everyone was getting all up in arms that Germany was sending troops to Greenland. And they left 44 hours later, and we actually got more information on the troops who were sent. It was 15 people in a reconnaissance mission. There was nothing to it, but these headlines definitely bubbled up and had an impact on markets on Tuesday.
I mean, it's just, I don't know. I don't know what to think about it. I think that it's not outside the realm of what the U.S. has done and other countries have done since the dawn of time, which is expand their borders, secure the parts of the world that they think they need to have control over. And I don't necessarily think that, I mean, for what reason does Denmark have a claim to a giant island that has very little to do with them geographically or otherwise? I mean, you know, if anything, I would argue that Canada has the closest claim. They're very close to it as well. So I don't really know where I fall on this, but I think it would be beneficial to the U.S. to have at least cursory control over Greenland, just as a function of you know, what they would call the Donroe Doctrine, which is locking down this half of the world and kind of making it, you know, secure for us. But I saw an interesting stat the other day, and I'd be interested to hear your guess on it. But what percentage of the world population would you estimate lives in South America?
8.
So the number I saw was 5 to 6%, which is pretty interesting because you think, you know, there's 7 continents, one's completely abandoned, and then, you know, everybody's kind of spread out on the rest. But I mean, that's virtually nobody down there. But you think, like, what are the biggest countries in the world? You know, China, Indonesia, India, Nigeria, the U.S. And at that point, you've knocked out quite a big chunk, probably half the population of the world, and you got to kind of split the rest up everywhere else. The Philippines, I think, has a pretty low-key, large population. But, I mean, even Colombia has 30 million people. I mean, that's not that, or not Venezuela, when they're talking about taking Maduro. It's like, that's not really that many people. I don't know where I was going with that, but it's in our benefit to lock down this side. And I mean, there's a lot of stuff with, like, I don't know if you've seen these reports where the Chinese fishing boats are basically all over the coast of Peru and just taking up all of the fishing lands, and there's kind of nothing they can do about it. You know, I think that's sort of the piece where we need to kind of say, hey, we're going to try and keep this half of the world for this half of the world's people, and you guys can have the rest.
Yeah, no, I agree. I think that's that's the doctrine, right? That's where he wants to go. So, speaking with more politics, but that have been having an impact on markets. I mean, we talked Winter Storm Fern did have an impact on markets. Greenland had a big impact on markets on Tuesday and had another big impact yesterday, and is allowing the market to rally again this morning. So we basically went down 2%, and if futures hold where they are today, we'll recover that 2% over the next 2 days. So it makes sense because what the fear is no longer should be a fear. But, you know, these stories do have impacts. Lisa Cook, the questioning of her ability to remain as Fed chair and really the administration's attempt to get her fired was a topic of conversation before the Supreme Court yesterday. It was interesting. A lot of the conservative judges, I mean, maybe Clarence Thomas had a little bit more sympathy for the administration, but Coney Barrett and Kavanaugh, I think, are really doing their utmost to show that they are as impartial judges as they can be. They're probably a little bit more strict constructionist, but at the same time, they want to, you know, abide by the law and also understand the consequences of those actions. And I think that is something now that we can listen to all these arguments. Something that I didn't really appreciate before is how much the justices on the Supreme Court are concerned with what are the implications of this decision, because they understand this is not just deciding the case and casting an opinion on the case, but rather you're setting precedent and very at the highest possible level. And Kavanaugh brought up the point. He's like, you know what are the implications if we do allow an administration to fire sitting Fed members. And he asked the prosecuting attorney this, and the prosecuting attorney said, well, we don't really have any history. And Kavanaugh actually pushed back. He said, I think the lessons of history are pretty clear. He says, once these tools are unleashed, they are used by both sides and usually more the second time around. So basically saying, be careful what you're asking for here, guys. And, you know, we're usurping Congress. If Congress wants to get rid of these people, you can impeach a sitting Fed chair or Fed member. But basically saying this should go through Congress and not the executive branch.
I mean, I think this is going to be a weird analogy, but I think it's almost like tattoos. It used to be the only people who had tattoos were sailors, and then it was sailors and tough guys and outlaws, and now every suburban mom you know has a full sleeve of tattoos. And so the meaning is almost the opposite, where it's like a lot of the least tough guys I know have double sleeves of tattoos, when it used to be specifically reserved for tough guys and people who've killed someone. So I think that's kind of, you know, what kind of society you want to live in. Because once you start moving that way, it can flip on you very quickly. Though I would say the interesting counter argument, and this is one I was kind of stewing on this morning while thinking about this, is the whole 2% inflation target is rooted in the removal of independence of the New Zealand central bank. Because we've talked about this a bunch, where did this 2% inflation target come from? It used to be 3% when I was in high school and you did basic economics. Well, the 2% was set in the 90s when they were trying to come up with a reason and a framework for which they could remove the central bank's authority in New Zealand. And they basically said, you've got to have inflation within a 1% range of our target goal, which we're going to arbitrarily set at 2%. And if you don't do that, then we now have a criteria to remove you and arguably remove your independence and change out the central bank members and start again and get the, you know, things rolling in the direction we want. So under those criteria, which we use as our baseline of 2% inflation, Jay Powell should have been gone years ago, because he was, you know, +7 over the target range. And it's now taken him, I mean, we're still not back. And so I think that's an interesting thing, where it's like we're basing the Fed's policy on a framework which was specifically used to remove the independence of another central bank. However, we are not allowed to question their inability to stick to a target because that would remove their independence. Now, that's separate from the Lisa Cook issue, which is that she's obviously committed fraud. But listen, there are many people who are employed in their jobs who have committed fraud. I'd argue it's a bad look, and that she should be, I don't know, sanctioned, reprimanded. And I think she has. I mean, I think she's probably embarrassed that it's pretty clear that she's just full of S, as people would say on the radio world. But, you know, does that mean that the sitting president can just remove people if they committed malfeasance and replace them? Unless we pass a law and create a framework for that, my argument would be, I guess not.
I'm with you, Tom. What he can do, though, is appoint nominate a new Fed chair, and it sounds like we're getting closer and closer to that. Hassett definitely seems like he's out. Trump again said, I actually like keeping him where he is. He's the economic advisor. And Trump did give away a little bit more in an interview with Joe Kernan in Davos yesterday afternoon. So Kernan says, are we down to 3? And Trump says, I would say we're down to 3, but we're down to 2, and I could maybe tell you we're down to 1 in my mind. So we're down to either 3, 2, or 1, but we're close. And then Kernan did say, did Rick Reeder impress you? Trump's response was very impressive. He's been there a long time. Kernan said, well, betting markets had Warsh. And then Trump goes right back to Reeder saying, well, Rick is very good. They're all good. All 3 would be good. Bottom line is markets are saying Rick Reeder has an incrementally better chance. He's up to 34% on Kalshi, Tom, the betting site. And I think he's still probably the underdog, but I think it's increasingly likely. And I think that Waller's essentially out at this point.
Yeah, I think This is another analogy, but my brother-in-law, my wife's brother, is a chef. And years ago, he mentioned to me something. If you go to a really nice restaurant and there's something very strange on the menu that's right up there with the other main entrees, you should order it because the chef thinks that it's very impressive and delicious. So you could have a steak, a chicken, a fish, and then you've got some sort of rabbit tripe or something you never heard of, head cheese, and it's up there on like the main courses. You should order that because it's probably unbelievable. Because if it wasn't, it wouldn't be on the menu. And I think that's the decision Trump is making right now, which is that Hassett is chicken, Kevin Warsh is steak, and then Rick Reeder is going to be your bizarre item, your squid ink pasta. It's going to be there, and you'd be like, man, this would be really interesting. I don't know if I've got the guts to do it. Like, it might taste really weird. I might feel a little bit queasy eating it, but I think that's where we're at right now. And I think that as time has gone on, the chicken's become less interesting because every restaurant's got chicken. So that's where we're at, I think.
And I think Besant has helped Trump develop a more acquired taste.
He's put some weird stuff in his mouth.
Moving on to economic data, we did get a revision on the Q3 GDP number. I can't believe we're still talking about July data, but we are. The original number was 4.3%, and this is a quarter-over-quarter number. It was actually 4.4%. Basically, what this means is we're setting the stage for really strong growth in the first half of the year. When we report GDP, it's different than reporting inflation. Inflation is reported what are prices today versus what are prices last year. When we report GDP, and so like think of it as if you're filling up a swimming pool. When you're filling up a swimming pool, you make a mark and pretend each mark you're making a mark after every quarter. And the amount of water that goes into the swimming pool is a direct function of how fast the water is flowing into the pool and how fast it is draining out. And that's what GDP, the quarter-over-quarter number that we got today is. That's a measure of how fast the pool is filling up. But in terms of how big the economy is relative to where it was last year, you have to look at the marks that you put every single quarter. And what happened last year in 2025 was Q1 was very weak. In fact, the pool drained more than it filled up. It was a negative 0.8% on a quarter-over-quarter GDP. Well, now in the back half of the year, if we're putting up 4% in Q3 and probably over 5% in Q4, then all of a sudden we've turned the tap on so fast that when we go to make our measurement in Q1 and compare it to last year's Q1 when we were actually draining water out of the system, it's going to look really big. And so why is that significant? Why is the year-over-year comparison significant? It's because that's how companies report earnings. And so when we look into the March quarter and when we look into the June quarter, we're going to see 4, maybe even 5% year-over-year GDP growth simply as a function of how high the pool has been filled up today. And like irrespective of even how fast the flow is going. And so it's going to make a lot of companies look really good in the first half of the year. Then, of course, you have tougher comparisons in the second half. But all these numbers that we get right now, 2.1, 2.3, 2.5, these are all year-over-year numbers that are really going to jump up in the first half. And I think that bodes well for company earnings. What will be tough, though, is when companies have guidance, they'll be asked to raise guidance, and they might not want to do that. So some implications there. We do have November consumer prices coming through, but that'll be at 10 a.m. You'll see big PCE numbers, personal consumption expenditure numbers. That's simply the GDP deflator. So there are two PCE numbers that are reported today. One is the GDP deflator from Q3, which is essentially, we grew actually at 8% in Q3, but then you got to take off 3% for inflation. So it was more like 4.5%. What the November PCE number is, what did prices do in November, which is a much more relevant data point. We already have a lot of the ingredients from the CPI and PPI numbers, but basically the takeaway is there's going to be two PCE numbers, one of which is going to look pretty bad. It's going to be 2.9, I think, Tom. and the other one is going to probably be a little bit better. But you gotta delineate, because one is based on July data, one is based on November data. Those months are 5 months apart. That's half a year.
Yeah, this is all going to be backward-looking data.
Even the November data is 2 months ago.
Yeah, it's going to be a mess, and people are going to be very confused, I think.
Traders, though, are buying. Like the 20-year auction yesterday afternoon, Tom, was exceptionally strong. In fact, I would say it was the strongest 20-year auction in the history of the 20 year, which admittedly only goes back about 6 years. But
not even. It was May. It was 5/20, 2020.
So I mean, that's a big deal that people are actually wanting to buy the 20-year.
Yeah, and as recently as a couple weeks ago, we were inverted on the 20s, 30s.
I thought we were the only ones who wanted to buy 20s.
I thought so too, and and we've talked about this a bunch, but the steepness of the curve between the 10 and the 30s has insulated us quite a bit, because we saw a big sell-off in bonds this week, and we were buying, sort of the 44s, the 52s, kind of in that range. And sure, we saw the 20 and 30-year bonds sell off, but we basically round-tripped completely. The 10-year, however, is back at a 425, so it's still sold off. So you've actually seen you're getting higher yields. You basically had zero performance on those this week. They've gone to zero. You're exactly flat. Meanwhile, shorter bonds have gotten popped, and that's why you play the term premium around the yield curve, because if you say, hey, we're cruising down towards 410 on the 10-year, that's overbought. Those are expensive bonds relative to where we think they should be. You look out on the long end, and we're ticking up towards 495 on the 30-year. We start nibbling some of those bonds. They come down a little bit, rates continue to fall. We get a Greenland spike, bang, we're right back up to a 495. That's fine, because we've had exactly zero performance on that, except we've accrued interest. Meanwhile, if you were like every other person on the planet saying, oh, we should buy 7-year bonds because that's the fat part of the curve, well, you've gotten popped this week and you have not recovered that. And so that's the point. And not only that, but you're buying lower yields. So you're getting less accrued interest over that time period. And so I think there's so much nuance here to trading different tenors on the yield curve. And the risk reward is not the same for all of them. In fact, the shorter you get, the less reward, the more risk you're taking, because there's so many moving parts right now. And if we suddenly see GDP take off to 7%, you're probably going to see shorter bonds sell off, because the expectation is if we get big growth, we're probably going to see inflation tick back up, and the Fed's probably not going to cut rates. And then you bought a bond that was expensive, and now it's cheaper, and you're in a net loss position for a period of time. Whereas if you look where nobody wants to be, odds are you're not going to get a lot of fluctuation because nobody's there. You can't move out of a house you don't live in, but plenty of people can move into that building once it gets hot. And I think that's, when they talk about crowded trades, I would think the least crowded trade in the universe right now might be the long bond. Everybody hates it. And so that's where we're camping out. We're the only guy in the empty office building right now. We've got a little campfire, some beans, and we're waiting for everybody else to move in.
We do have a lot of earnings today, a lot of companies reporting earnings. I'd say the biggest things that I'm seeing, first of all, Procter & Gamble, not getting much volume growth at all. They don't have any pricing power right now. Pricing was up 1%. This is not going to continue to increase. Tariff headwind remains the same. So kind of status quo there. I think they're probably trending toward the lower half of their guidance. So not a great number from Procter & Gamble. So basically what I'm saying with that is I don't expect inflation to be going up significantly because of them. I also don't think inflation is going to be going up significantly because of the trucking side of things. On one hand, you do have capacity being taken out of the industry, which is helping to stabilize freight prices. But between lower equipment prices, because all of the drivers need to just get rid of their equipment, there's a lot of secondhand equipment out there. So you're able to manage your costs pretty well, and Knight Swift spoke about that. So, and then finally, General Electric reported earnings. Their orders were very strong, as you might expect, given all the Boeing orders from international customers. So we'll leave it there for today. We do have a lot going on even tonight. We have Intel reporting earnings, CSX, Alcoa, which used to always initiate earnings season and now is just kind of fragments of its former self. And then tomorrow morning we'll have Capital One, which I'm very interested with, especially considering the 10% cap.
Ben, would you say there's a lot of extra equipment in the trucking industry because there's ice all over the roads?
I think that's a fair response.
Not the ice you think. And with that, I guess we'll see you tomorrow. Happy Burrito Day.